Hi guys, and welcome to this weekly mentorship video. And we are going to talk a bit in detail regarding dollar index, right? So as I've mentioned earlier on the group, we are starting the second quarter, right, for the year 2022. And remember what we talked about, like there's always a major shift in price action almost once every quarter. Now it depends with where price is, where that shift is going to happen. But as it is right now in dollar index, uh, my focus is only pointing to the upside. We are looking to go above 100 on dollar index. So without wasting much of your time, folks, right? What is it that we should be looking out for in the coming quarter or in the coming 2 months or a month from now? And I would categorically say that we should be anticipating further moves to the upside. But now, those further moves, if we look at where current price is, right now we are trading right around 98.97, just below 99. Price is not just going to break that level quite easily. And if you've been following the dollar index price action, you'd have noticed that on lower time frames we have a trading range. Price is ranging, so almost basically there's reaccumulation happening at lower time frames. Now, as for the future forecast, you need to ask yourself, where is the draw on liquidity right now on dollar index? Now remember, the analysis of dollar index is going to help you now in coming up with decisions whether you're going to be long on the majors or short on the majors, right? So the draw on liquidity right now on dollar index is much high, right? The high of March, which is coming in at 99.46. So we need to highlight March high. So that's coming in at 99.46. 99.46. The reason why I'm saying that's the draw on liquidity is because there's buy stops above that price point, right? We have buy stops residing above 99.5, 99.456, if I'm not mistaken. So it's 99.46. That's our draw on liquidity. And when we look at price action, right? Now remember, if we are starting from the monthly chart, we need to look at the 9 to 18 month profile. So including the current month, our 9 to 18 month profile is coming in right here, October 1st, this level here, which was broken to the upside. Now, what is that framework? What is the framework of the current price action? We're in an expansion, right? And prices are expanding, going to the upside. That's to say, price is bullish. With that said, you need to identify the discount array that is in control of current price, right? We have seen this imbalance here on the monthly chart, right? We've seen this imbalance here getting filled in the month of March, right here. The imbalance was filled, right? And price traded all the way to the upside, and then eventually there was a bit of retracement. Now, that point, at that point when the imbalance or market inefficiency was filled, your eyes or your attention would have automatically been drawn to February high, Now, with February high in focus, we now have April low. The low of April and February high. The low of April, which is currently at 98.335. See, 98.335. That's the current low of April. What does that show us in terms of the bullish momentum that we are seeing in dollar index? It shows that there's now a fair value gap. You see, we now have a fair value gap here. We now have a monthly fair value gap. So that's between the low of April and the high of March. But now I'm just gonna, you see, you must also try to do the same on your charts so that you know exactly what we are talking about. So I'm gonna use blue dotted line to resemble my monthly fair value gap. Sorry about that. So that when we go to lower time frames, we will know already that price is in between the fair value gap. So now with that said, we can clearly see that our draw on liquidity is 99.43, 99.47. And then we have a level price action of which price or IPDA will look to fill and then trade to the upside. This is the perfect price delivery that I would like to see on dollar index. Yes, the rally that we are getting right now can go and clear above those buy stops above 97.47. It can rally and clear those buy stops, but during this month of April or sometime in the next 45 days or so, we should see dollar index trade lower inside the fair value gap. Now, if you have been following, you can see this has been a recurring thing on dollar index. We had price here, rally, and then it created this fair value gap between this month, these two bearish candles. There was a fair value gap. It was only eventually filled the following month, and then price rallied. The same thing happened here. You see, there was a fair value gap and price filled it up and it rallied. So I'm expecting a pure price delivery of the same nature during either the month of April or May. We are likely to fill up this fair value gap before we see another further push to the upside. Now, the draw on liquidity firstly is initially at 99.47, and then short-term draw on liquidity is this high here, the high of May 2020, coming in at 100.59. Now you see why my focus is to the upside. 100.59. That's my ultimate target on dollar index. I'm anticipating dollar index to trade above 100.50 in the coming quarter or the current quarter or sometime before the third quarter. So these two are my targets for dollar index in the next 45 days or the next quarter, right? Those are my targets for dollar index, meaning we are very strong bullish by my forecast. Remember, there's always room for argument, right? And this can turn around if something bad happens, or if we start getting bad economic numbers from the US. This can always turn, because on lower time frame, you see, this fair value gap we should see a bit of weakness coming into the dollar. But looking at the long-term interest rates, you see, looking at the long-term interest rates, I'm just gonna go to the long-term interest rates shortly. When we look at those interest rates, we can clearly see that there is money flowing into the bond market, right? And when there's money flowing into the bond market, money seeks yield. Dollar is likely to rally, you see. So the way the bond market has been rallying of late has also been coupled with a strong dollar. You see, there's no denying that dollar has been strong of late. Now, I'm just going to look at the three long-term interest rates. That is to say the 5-year and the 10-year and also the 30-year long-term interest rates. This is going to give us also another clear picture of where price is likely heading to, right? Now, when we look at this, already we've discussed this in class already. In December, the 30-year created a new low. There was divergence between the three interest rate markets. In December, the 30-year yield created a new low. There was divergence there, accumulation for this long push. Then on the other two, we only saw reaccumulation. The other two did not create a new low. That was clear smart money divergency for long entries into the interest rate market. Now, when we look at these interest rate markets, starting with the 30-year yield, you can clearly see the imbalance right here, right? This imbalance here is likely to be filled, right? The moment that this imbalance is getting filled, same thing here, we've got imbalance here. We also have imbalance here, though it's a bit smaller on the 10-year. The moment that we see this imbalance getting filled, either on the 30-year or on the 5-year, that will result in a strong dollar. You see, it's going to result in a strong dollar. So right now, what we need on dollar, what kind of price action we need is the reaccumulation phase for a further push to the upside, and that can only be identified now on lower time frames. Now we're going to go to the weekly chart. Now on the weekly chart, remember the two blue lines, that's fair value on a monthly chart, and you can see how it has been respected now on the weekly chart. Price was coming and then it pushed to the upside, price coming and then pushing to the upside. So that's fair value in terms of the current month and the previous month. So we've got fair value there where we should anticipate price to trade lower and push to the upside. Now on the weekly chart, the most interesting price action you have to take note of is this guy. See this bearish order block here. This weekly bearish order block is crucial. It's crucial in terms of determining where price is likely to go, right? Because if it happens that it provides proper resistance to price, then we're gonna see price drop, right? Ultimately all the way back to 97.65 to fill up that imbalance on the monthly chart. So as long as we are down here, right, you need to exercise caution. Only on positive news for the dollar, then you are going long on DXY and you are shorting Euro USD, Pound USD, Aussie dollar, New Zealand dollar. Though with the latter two, Aussie dollar, New Zealand dollar, just be careful because there's a bit of money flowing into gold and it's only going to result in those two currency pairs moving to the upside. So I would put those a bit on the side. So right now we are trading inside our weekly bearish order block, right? So meaning 99.45, that is where the buy stops are located That's where the draw on liquidity is. So we need evidence, we need catalyst to move price to the upside. So we can clearly see we've got long-term uptrend. Price is moving to upside. For this bullish breaker here, price came to the level where price broke to the upside and we are pushing. So having 99.45 as our draw on liquidity only on positive news for the dollar, guys. Remember that only on positive news for the dollar. That's when we should target this level here. And once we trade above, right? Once we trade above, this weekly bearish order blocks becomes your new support for price, right? Though it can fall all the way to this monthly fair value gap. See? So what I'm doing now with my focus, guys, with the weekly video, I'm now going into further details of how I look at price. If you have noticed, it's no longer like, oh, we should be looking to trade from this order block, or we should be looking to trade from this fair value gap. We need to move on. We need you guys to graduate further so that you look at price attentively, being curious to know what is it that is moving price. What should I be anticipating to happen in the market? So as you go to lower time frames, obviously on daily time, you can see this range price is probably reaccumulating there. But if we go to H4, right? Now on the H4 time frame, which is our entry time frame, these order blocks here, especially these bearish order blocks on H4, right at the top of the range, just before our draw on liquidity, they are going to provide resistance. So you need to be very careful. They are going to provide resistance. The gray shaded area, that's our weekly bearish order block, and price is right at the top of that weekly bearish order block. So you can probably say it is in overbought conditions. So expect probably a drop to the downside to fill up these imbalances here on H4, or trade back to this intermediate short-term higher low, this level here, before we see a further push all the way to 99.46. So what I've done is I've outlined dollar index market structure as in where we should be looking for price to trade to, and right now the focus is bullish on dollar index. Your assignment now, guys, for the week is to do your own analysis. Just choose any pair, the majors. If you choose Euro USD, Pound USD, or Aussie dollar, New Zealand dollar, do your top-down analysis with supporting facts, supporting fundamentals that are going to allow you to short those four currencies. Or if you decide to do USD CHF, USD JPY, or USD CAD, do the top-down analysis on those pairs. That is going to help you and support you in looking for longs on those pairs. So yeah, that's pretty much about it for this week's video, and it's a bit different, I know, but that's the only way that you guys can really understand how to read price. So with that, I wish you guys good luck and happy trading. Thank you.